Lyft has released their first earnings report since their IPO, and shock, shock, they lost money. But they say profitability is just around the corner. Hey everyone, this is Kevin the Apptrepreneur, and well, here's the thing. Lyft has released their first annual earnings report for the first quarter since becoming a publicly traded company. And this is what I was personally really interested in, because me and several other people said, you know what, it's all fun and games now. The real question, the real test is going to be, what will the shareholders do after the first earnings report? Now, granted, we might not know the full extent till tomorrow, which is really today for you watching, but I wanted to comment this now because I'm going to be at the strike and maybe we can get an extra video out of it. Who knows? But Lyft, of course, revealed some things that were not cool, that they were losing money. But good news for drivers, hey, profits seem to just be around the corner. But before we talk about that, let's have a word from our sponsor.
And today's video is sponsored by Maximo, the rideshare automation app that allows drivers to safely and easily accept ride requests for Uber, Lyft, and Postmates. Whether you drive for a single platform or multiple platforms, Maximo's custom settings can help you drive more efficient, less distracted, and help you maximize your earnings. It will automatically accept one trip, turn off the other apps, and when your trip is over, it will end it, open the other apps, and accept the next trip, all without you having to touch your phone. Use referral code APP60 and get your first month free when you subscribe to Maximo.
And here we go. Lyft sees peak losses this year, says ride-hailing has path to profit. You know, before we begin reading this article and looking over some of the bullet points, I'm just going to say one thing. The capacity for these companies to BS every situation is astonishing. We went from the company having no sight of profitability. In fact, they were going so far as to say they might never be profitable, to within a couple of weeks, oh, by the way, we're going to be profitable. I'm wondering if that's because they need to, sell more stock. Stock might not be doing very well right now. But anyway, let's look at this article from Reuters, who, on a side note, congratulations for getting your journalist back, by the way. It says ride service company Lyft Inc. forecast that its losses would peak this year as it controlled expenses and got more revenue from each customer, posting a $1.1 billion quarterly loss on Tuesday, days ahead of rivals Uber's IPO. And I have to say, $1 billion, yep, sounds about right. They are very consistent about stuff like that. It's always $1 billion or so. We are encouraged by our strength of our core business and see a clear path to profitability in ride sharing, said Chief Financial Officer Brian Roberts, sparking a short-lived bump in shares that subsequently pared gains. Lyft promised profit in ride-hailing services without giving any timeline, of course, but it previously had warned regulators it may never make money overall as it invests heavily in self-driving cars, renting scooters, and other ventures. Just a thought. If you might never be profitable because you're always investing in this technology, maybe the problem is that the technology isn't profitable and you should not invest in it. But that's just me. That is just me, of course. As ferocious growth slows at Lyft and Uber Technologies Inc., investors are paying more attention to what the companies need to do to make a profit. Well, they need to raise the prices. And they need to pay the drivers better so there's not so much turnaround, which results in a lot of money just being thrown away as bonuses. But again, just my thought. Investors appeared uncertain how to interpret the company's performance, with shares moving up and down after the bell. Since Lyft's IPO on March 29, shares had fallen 23%. So basically, those of you who got suckered into the IPO, you might eventually get your money back. I'm not going to say they'll never get above $87 again, but it's not going to happen anytime soon. At least it doesn't look like it. The report, Lyft's first as a public company, showed revenue nearly doubled for the quarter, ended in March, but forecast that growth would slow 52 to 53% for the full year. So basically, every gain that was made will slow. And if they're not making money now, what happens then? Lyft is watched as a bellwether for Uber, which will price its offering on Thursday, hence why there's that strike on Wednesday. Lyft said it was getting more revenue per customer, reducing incentives and boosting margins. Oh my gosh, there it is, right there, black and white. They're raising the prices on the customers. They are cutting the bonuses, which for some markets, people have been signing up for my Lyft code, and they're being offered $20, which is not the $500 most people got. And boosting margins. Yeah. Although investments in areas such as self-driving scooters and bikes were masking improvements in its core business. Masking is a kind word. New technology to match drivers and riders in higher price rides in luxury vehicles were helping boost margins, it said. Lyft said it had adjusted EBITDA. I don't know what that means. A margin improved to negative 20% from negative 60% a year ago. It's still a negative. It's not positive. That's the bottom line, you idiots. The company, which says it has nearly 40% of U.S. ride-hailing market. Oh my! Do they listen to these comments? We're growing. We're decreasing our margin losses. We have 40% of the market, which means there's not much more we can grow, and we're still losing $1 billion. But yeah, profitability is around the corner. Whatever. Sorry. Said increased demand helped push revenue to $776 million in the quarter, above analysts' average estimate of $739.4 million, according to IBS data from Refinitiv. A second quarter revenue forecast of $800 million to $810 million was ahead of analysts' expectations of $783.1 million. Well, that's nice for them. The low end would amount to a revenue increase of 50%, however, far short of the growth Lyft has enjoyed recently. Sorry, my throat's feeling really bad now. So, 1 second, folks. Sorry. Last year's second quarter revenue got a boost from a price hike, making this year's comparison more challenging, Lyft said. Analytic equities analyst James Cordell called the results pretty strong, with hints that Lyft was continuing to take market share from Uber. He cautioned, however, that Lyft's outlook did suggest a meaningful slowdown in revenue. Yeah. The question will be whether this is just conservatism, Uber starting to fight back, or the company hitting tougher comps, Cordell added. In a snub to Uber, Lyft also announced a partnership with Alphabet Inc.'s Waymo, in which Lyft will deploy 10 self-driving vehicles around the Arizona city of Phoenix by the third quarter. Oh, yeah, let's get excited about that. 10 self-driving vehicles. I mean, shoot, everyone who's in Phoenix, Arizona, you better look for another job. They're releasing 10 of these things on the road. Uber has welcomed Waymo cars on its network, but has not signed any deals. You know what? Let's backpedal just a moment here. This could still be Lyft's big secret weapon. Google, who Alphabet owns, I believe Alphabet is Google's parent company, they are definitely pushing the Waymo self-driving cars very, very hard. And by all accounts, their self-driving cars work better than most. Still not good enough to go prime time, but they do work. So Waymo and Uber have some pretty bad blood, that whole, lawsuit thing that happened. If they're going to partner with Lyft, that does give Lyft a strategic advantage should this particular car actually work at some point. Personally, I think Google will just end up buying Lyft, at which case, then your Lyft shares will definitely be worth something at that point. But, that could definitely be a black mark against Uber going into this. For its second quarter, Lyft forecasts an expected adjusted EBITDA loss of $270 million to $280 million. Now, here's an interesting thing. This is what they're projected to lose. So they're still projecting to lose money later on in the year. Not something investors want to hear. But if those losses are higher, if they find out that Lyft was basically pulling a number that didn't sound as bad, the investors will turn on them. Lyft posted revenue of $37.86 from each of its 20.5 million active riders during the first quarter, a 34% increase in revenue and a 46% increase in riders over the same period in 2018. A net loss widened to $1.14 billion or $48.53 per share in the first quarter ended March 31st. Yeah, Yeah. Okay. That's a lot of stuff. So, you know what? What's the Lyft stock looking right now? What's it look like? Okay. So that could be worse. I've seen it get as low as 57. But here's the funny thing. Here's the report. Here's the day. Throughout the day, they're kind of wondering. They're wondering. Report comes out, goes up a bit, drops quite a bit. Then it goes up sharply, and then it starts trailing again. So we really don't know exactly how Wall Street is 100% reacting to this. Although I think it's kind of obvious. Personal prediction, of course. Personal opinion. Not financial advice. Don't take this as such. But I think the investors are not happy with this report. I think it got down to a point where some people were willing to jump in, but it's going down again. I'm going to be very curious to see what the Lyft stock is like tomorrow. After hours, it's gone down to 57.65. That's awfully close to the lowest it's been. Like let's do max. What's the lowest? Well, as you can see, it's just gone down. Oh, actually, it might have actually gone down even. This might be the lowest it's been at 57. Who knows? This is it's not very promising. That's for certain. Let's look at the year. Okay, the lowest it's been is 56.11. That's the lowest it's been. We're 57.65. We're pretty close to that right now. We'll look it down to 55. We'll look at to 50. Who knows? Personally, I'm going to buy it 40. That's what I'm comfortable buying it at. But we'll see. We'll see what happens. In the meantime, yeah, today's the day of reckoning. It's the Uber strike / protest. I'm going to be out there filming live, so you will see this face again in a live public setting. Will there be any trolls that come out to pick a fight with me in person? Or just spirited people who want to disagree. Or maybe there'll be a lot of agreements too. Who knows? Will the rideshare professor be there? Will Dave the Uber slave be there? By the way, folks, on another positive sign, we got Driver Lady Pro to 1,000 subscribers. So, thank you. We've been raising good money for her. She got 1,000 subscribers. So, good job. But we're going to end that there. I'll see you guys later. What do you think about all this? Do you have anyone here actually buy any Lyft stock? Like, what are your feelings about all this? Do you think this was a good investment? I'd love to know. So comment below. Like, favorite, share, subscribe. If you enjoy my videos, consider becoming a Patreon member. It's totally optional, of course, but even as little as $1 a month goes a long way to helping the channel run smoothly, and you get access to my Patreon exclusive vlog. Also, with gas prices rising, check out the Get Up site app below. It's totally free, but you'll get cash back on every gas purchase. Subscribe to the Apptrepreneur Vlogs channel. It's a new channel, but we've got weekly content going up, every week. And check us out on Facebook at the Apptrepreneur Hangouts. And as always, flame responsibly. I'll see you later live. Have a good one.